start. Hello, everybody. We're going to give everyone a moment or two to step in and get comfortable. We've got a high energy, big hour and a half to go today. So I'm going to be brief, which is hard for me to do, but I'm going to try anyway. I'm Linda Griffian, the Education Programs Coordinator with Business Link, and I want to thank everyone for joining us today. At Business Link, we are honored to provide services to all entrepreneurs and specialty services to our immigrant and Indigenous entrepreneurs. We are inclusive in our cultural understanding and awareness of the histories of our country. With that, we will start this event with a land acknowledgement to recognize all of Alberta. Just letting you know, we have a speaker on today, Tanya, who's from Saskatchewan, but because we're Alberta-based, we're going to do the Alberta acknowledgement. So we want to acknowledge that in the province of Alberta, we are situated on the traditional territories of Treaties 4, 6, 7, 8, and 10, ancestral homeland of diverse First Nations group, Métis and Indigenous people, whose ancestors have walked this land since time immemorial, and whose histories, languages, and cultures continue to influence our vibrant community. We pay respects to the Indigenous people of this land, past, present, and future, while recognizing their cultural heritage, beliefs, and relationship to the land on which we reside. A bit of housekeeping for today. We welcome your interaction with this particular session. There's a lot to cover, so your interaction is welcome. You have two ways to interact. One is through chat to say hello and introduce yourselves. The other way is through the Q&A. So if you look at the bottom of your screen and you see the little bubbles that say Q&A, please open those up and place your questions into there. Either myself or my associate Rawa, who's on today as well, will be taking those questions and asking them verbally to Tanya so that your questions get answered. We have some worksheets that are going to come in chat in about 10 minutes on a downloadable link. So you'll have worksheets from today's sessions as well. We do not send out PowerPoints and PowerPoint slides and that sort of thing to participants. However, this session is being recorded, so you'll be able to access the recording on the Business Link website in 2 to 3 business days. If you shoot on over to Business Link and go to the recorded webinar section, you should be able to see this by Thursday or Friday of this week as a recording, and you are welcome to go through that recording as much as you like. Thank you, Tanya, today for joining us and taking this session to everyone. It is always fabulous to do this session with you. So I'm super excited you're here. We have Tanya Woods Richardson, and I'm going to let you move it forward, Tanya. I know you have a lot to cover.
Awesome. Well, Linda, thank you so much. And thanks for the opportunity to join all of your founders here today in Alberta. Thanks for putting your trust in me, because numbers aren't usually everybody's favorite thing to do. I'm sure some of you might have preferred to get to the dentist and a root canal versus digging into your numbers. So I'm thrilled that you're here. I'm going to make this painless and hopefully maybe even a little fun for everybody today. So delighted to be here. Thank you, founders, for inviting me into your businesses and offices today to talk numbers. My name is Tanya Woods Richardson. I'm looking at the guest list here and a lot of new names to me. So again, thank you for joining in. We haven't yet met from the looks of things. And so for those of you who I have not yet met, my name is Tanya Woods Richardson. I am the founder and CEO of a company called Nail the Numbers. We are the ultimate in financial training, actually, the ultimate in fun financial training for Canadian founders. And since we started almost 10 years ago, almost 9 years ago, 2014, we've supported over 10,000 founders across Canada in really hammering home financial strategies that show you how to get from where you are right now to where you need to be while charging the right price, paying yourself the right rate as a general manager and CEO of your business, and ensuring that you've got a healthy net profit, aka a bottom line. So that is the work that we do at Nail the Numbers. And again, just a journey to be here with all of you today, working through what we call the wake-up call. So as Linda mentioned, I am going to ask all of you to engage. So normally when I do these boot camps, I get to see everybody's faces, get to make sure everybody is like paying attention and crunching the numbers and working on them. Today's a little different. So what I'd like all of you to do, definitely use your chat right now, because I would like everybody, I always have a rule of 3, so I don't move on until I get 3 responses. So everybody get ready to type here. What brings you here today? What are you most looking forward to getting out of our time together? Because you're investing an hour and a half of your time in crunching the numbers. I want to know specifically what you want to pull out of today's session in an hour and a half. Why are you here? Let's get 3 answers in the chat. Let's go.
Okay, Tanya, and while we're waiting for people to respond, please, people, we want you to respond. While we're waiting for that, if you could change your chat from hosts and panelists to everyone, we will be able to get you responding. So folks, you're here today. What do you want to get out of this? Do you want to get more time, more money, more insight into your numbers? Please post away in chat. For myself, I know I've done lots and lots of work like this. So some of the work I've done in my own business has helped me understand how to change my marketing using my financial dashboard. That was a big eye-opener for me. Was once I knew what my numbers had to be, I understood that I had to market my business completely differently. Oh, here we go. We've got some people.
There we go, people. Thank you. I was wondering what was going on there. I really appreciate your leadership, Karen and Krista. Thank you very much. And we're waiting for one more. So Karen, I'm just starting a consulting practice. I don't know how much to charge, how much I need to stay solvent, or how to manage my business to be sustainable. Okay, thank you, Karen, for that. And just so you know, you're not alone. Most business owners, we start a business, we don't have any idea about the numbers. And typically we start it because we believe we have something of value to offer the world. But like yourself, Karen, many people just get in there and throw caution to the wind and get started not knowing the numbers. So I appreciate you being here. I appreciate you being vocal on chat. Thank you. And then Krista, brand new startup, small business. Okay, you're going to see I have some opinions about small that might shift your thought process at the end of this call. A student of Anderson Career Training. Oh, fantastic. Okay, I'm familiar with them. Your business is social media marketing. Terrified and excited. You hate math, you hate numbers, but I love money. You love money. You want to learn everything and everything. Okay, fantastic, Krista. Interesting, a lot there. Thank you for sharing all of that. Hopefully by the end of our call, you'll better understand that math and numbers and money, they all come from the same bucket. And usually our resistance to looking at numbers usually comes from a resistance to actually looking at the consequences of our choices. So we'll talk a little bit about that. Awesome. I'm so proud of everybody for weighing in here. Jasmine, you want to learn how to grow your net profit. Okay. Rosemary, profitability has never been good. Okay, your sales are near 1 million, but the bottom line is still disappointing. Mary, you're not alone. Again, I've worked with businesses that are up to 25 million in annual revenue, and that might look good on paper, but at the end of the day, their net profit isn't there. Net profit is one of the key indicators that talk about the health of the business. Lindsay, CF Wild Rose, love Wild Rose. I'm glad you're here, Lindsay. Thanks for showing up. Mark Eaton, insight and insights on ideas, ideas that continue to grow in your co-working space. And Sandra, you need a roadmap. Okay, fantastic. Thank you again, everybody, for showing up so powerfully in the chat. I really appreciate it. It's going to make our call go a lot stronger when we know that everybody is engaging here. So a big piece of why I am here today, we're going to cover a lot of what you're talking about. It's going to be high level. We're only here for an hour and a half. So I definitely want to show you what the roadmap looks like. But this is probably going to be very different from what you're expecting. And I'm going to tell you exactly why we're going to do it the way that we're doing it. Why I'm here specifically today, this is a boot camp called The Wake Up Call, right? And the wake up call, why we're doing this is because the vast majority of founders are financially compromised. And I'm going to get into some numbers, but the outset of what we're going to do today is we're going to talk about what is the fix to that financial vulnerability. So some of you may not even realize how financially vulnerable you are. It might just be a subtle feeling that you have. It's like, my bank account is tight. My wallet is tight. My credit cards are maxed out. You might not know exactly what is going on, but it doesn't feel good, right? So that's usually a key indicator of that financial vulnerability. So today what we're going to do is we're going to map out what I call the fix, but it's not a short-term fix. It is a long-term fix. This is going to be a fix that my hope for all of you is that you take forward for the rest of your life. This isn't some, quick seminar where it's like a quick dip and you get what you need and then you go. This is going to be hopefully a practice, what we call it, Nail the Numbers, a protocol that you will take forward for the rest of your life, both in your personal life and in your business life. So what we are going to do over the course of the next hour and a half, we are going to, my goal is to motivate you into action to finding financial security, believe it or not, both at home and in business. So the first thing we're going to do is we're going to take a look at a little bit of data, because we are right now, we're in a society where there tends to be a lot of shame and guilt around our financial situation. A lot of people don't talk about numbers. So again, I'm so proud of all of you for showing up and taking a look at what your numbers may be telling you, because this is where it all starts. So we're going to take a look at some data, and then we're actually going to go through what I call the first steps of your fix, right? How we're going to start fixing everything. Then I'm going to walk you through some frameworks, and I'm going to give you an offer. I'm going to make an offer at the end of all of this, and then make sure that you know how to reach me and contact me as you now implement. So one of the things that I'm going to be asking you at the end of this workshop is, what is the one thing that you're going to take and implement, and by when? Because there's no point in joining me for an hour and a half if you're not going to take something away from this and actually start to implement it. So knowledge is one thing, but it really starts to pay off for you when you actually start to implement. Okay, so on a scale of 1 to 5, I want you to put in the chat, how financially fragile do you feel right now? So 1 is that you are solid, you are rock solid with your finances, and 5 is you're about to crack. You feel extremely fragile, you're an egg, you're walking on thin ice, you don't feel strong at all. So 1 is super solid, 5 you're about to crack. Put in the chat right now, how financially secure are you currently feeling in your business? 2, 4.5. Krista's rocking it. 4.5, 2. Okay, let's get a few more in there. 4.5, another rocking. Sandra, another rocking. Okay, you're feeling fierce. This is what we call financially fierce, where you are feeling fierce in finances. Okay, Rosemary, you're 3. Okay, Jarell, I like that. Okay, so you're 6. Jarell's a 6. Okay, well, so interesting insights here. You said that I was feeling fierce, and 5 was, oh my goodness, Jasmine, you're absolutely right. I totally got that backward. Thank you for paying attention. Well done. I love this. I wish I could see everybody's faces, because I think you'd all be laughing. So Jasmine, thank you. Yeah, high fives to you. You caught me. So good. I was getting a little confused too, because I'm like, if everyone's feeling so fierce, why is everybody on the call? So I'm glad that we're all in the right place at the right time. I so appreciate that. Good thing we've got chat here today. All right. Okay. So let's just get right into what it is that we're going to do today. I actually want you to take a blank sheet of paper or use your worksheets. I know Linda's trying to get you a copy to the worksheets. Don't over stress about the worksheets today. They're just guidelines. You're going to get access to a whole whack of tools and worksheets and workbooks later on. These are the worksheets today. They're high level. The real work is in downloading the tools that we've got for you today. But I want you to write this down somewhere, because this is super important. This is part of the protocol that we use in all of our blueprints at Nail the Numbers. If you want to fix something in your life, including your financial situation, you need to do this. CSEE, know, KNOW, do, DO. See, know, do. C is get crystal clear on what you're looking to create. So most founders in our experience, they want more money, but they don't know how much more money they need, right? They need more time, but they don't know how much time they need exactly to get everything done. They're looking for more appreciation in life and business, but don't know exactly when enough appreciation would actually be enough, right? So see exactly what it is that you need to create. Don't get stuck in this, I don't like my situation. Take the time to use your prefrontal cortex and identify exactly what it is that you need to create. When it comes to know, I want you to think about knowing why it's important to you. So oftentimes founders, if I ask them, what is it exactly that you're creating? Some will actually just jump to an arbitrary number. Oh, I'm looking to create a business that's worth $1 million, right? And then I ask them why. Why is that important to them? And then they have crickets. So it's really important to know why you're looking to create what you're creating. That whole C piece, why is that important to you? That's the know. And then do is work the plan. So anytime, hopefully you've written that down, see, know, do, because that is always your fall to. It's always your go-to. When you're feeling stuck, if you're feeling stuck in anything, go to the see, know, do. What am I creating? Why is it important to me? And now let's work the plan. So that's what we're going to do today. We're going to figure out the see, the know. That's where we're going to spend a lot of time. And then I'm actually going to walk you through the do, which is how do you build a financial strategy in your business. So hopefully that is clear for everybody as we get started here. So one of the very first questions I like to ask people, and I'm actually just going to share my screen now so you can see some other visual visual ideas here versus just me on a screen for an hour and a half. And maybe, let me just bear with me here. I am going to hit start so that you can see the whole shebang. There we go. Okay. All right. So one question that's really important for you to answer in alignment with the C idea is, why did you start your business? Why did you start your business? Like, really think about that. Now, when I ask founders why they started their business, I can tell you that a lot of founders usually say to me that they started their business because they love what it is that they do. They want to be able to give back in the world. They want to be able to make a difference. Some will actually be honest and say, it's because I want to make money. Some will say it's because I want free time in my life. I want more balance. So really important for you to understand the why you're building your business. Now, I'm going to challenge you on the why as we go through today's call, but really important to land on the why. And I want you to think about that. And we're going to circle back to this in a few slides here, because you'll see why the why is so important. Now, here's where we start talking about, again, why most people start their businesses is they want to find a way to give back, with that whole list of reasons why people start. But here's some numbers that I want to go through with you, because most founders right now are financially vulnerable. These are pre-COVID numbers. So most businesses start a business. I think it was to Karen's point, and no judgment. This is what most founders do, but we start a business with this idea of, wouldn't it be nice if, but we're starting a business on a financially shaky foundation at home. So in Canada, this is what was happening pre-COVID. We were $13.7 trillion in a deficit position for our retirement needs come 2035. Canadians were spending $1.76 for every dollar that we earned. We were the worst developed country in the world. We surpassed the United States with respect to our spending habits. We now, since COVID, have gone up to 177. I've been doing this work for 30 years and it keeps going up. It doesn't go down, it goes up. We are saving less than 3% of our income. For founders, this is worse. The average Canadian has $27,000 of consumer debt. This is consumer debt. This isn't mortgage debt. This is consumer debt. So it does not include our households. By the way, if you have any questions, I can't see them right now, but I know that Rala and Linda are there. So if you have questions, put them in there and they're going to interrupt me I love being interrupted with questions, so please feel free to shout out your question if you have one here. 46% of Canadians, this is fascinating, pre-COVID, were $200 away from insolvency. That means that 46% of Canadians were not $200 away from not being able to pay their burn rate, their monthly bills, right? And that's what insolvency is. You don't have enough money coming in to take care of the money that needs to go out every month. They were $200 away from that. This is why when COVID hit, everybody went scrambling for the benefits. This is why 16% of Canadians are underbanked or unbanked, which means that they can't get a bank account, or if they can, they don't get access to credit. And 2 in 10 Canadians could access $1,000 of cash in the event of an emergency, because we're saving less than 3% of our income. So why I share these numbers with you is just to let you know, again, you might not realize that you're financially vulnerable. If it's feeling tight, I want you to know you're not alone. This isn't about judgment. This isn't about shame. It's about you realizing that you're not alone in this situation. So here's the next layer to all of this, is that as founders, if we know that that's the average Canadian with respect to our financial relationship, right, our relationship with money, here's what most founders are doing. They're further compromising their financial situation, because from a spending perspective, they typically are maxing out their lines of credit or their credit cards, or they're taking out personal loans to start their business, right? So under the pillar of spend, we've got that extra layer of gravitas on top of everything. With respect to their saving pillar, they're typically wiping out their savings to start their business. And that was me. I wiped out my savings to start my business back in 2002. Sharing, just so you know, sharing, I find taxes, I consider taxes a form of sharing. And oftentimes with founders, they're not on top of their personal income tax. The other pillar we have here is investing. And again, where founders further compromise their financial situation is that some may take out liens on their assets, aka their property, so that they can get a loan for their business. They've cashed in investments. Again, this was me, right? So no judgment. I cashed in my RRSPs so I could put it into the business at a huge cost. And then we also take promissory notes for our loans oftentimes. So if you're not aware what a promissory note is a legal document that says, in the event that the business can't repay the loan, you are personally on the hook to repay the loan. And then, of course, our earn pillar. So these are 5 pillars of financial stewardship: spending, saving, sharing, investing, earning. And then most founders aren't earning what is considered a fair market wage, right? We compromise our earning capacity when we start a business. I'm going to stop the share because I want you to weigh in on the chat. And I'm glad this makes you feel a lot less alone, Colin. That's the idea here. Can you please put in the chat who here feels like they've been paying themselves a fair market wage as a founder, as a general manager of your business? Put it in. Nope. Yep. Mark's like, nope, definitely not. Colin says, Karen, awesome. Congratulations. Nope. Nope. Not paying myself. Right. Okay. Again, not alone. We've worked with over 10,000 founders over the last 9 years, and over 95% are just scraping by, Sandra. They're paying themselves last every month, and they're paying themselves what the business can afford them, right? We're scraping by. So we're going to change the game today. If I got paid what I'd go to jail. I know when you think about all the hours we put in, right? I know there was a joke at one point a couple of years ago with a lender in Manitoba, but it worked out to $1.72 an hour if we actually calculated how many hours in and what we actually pay ourselves every month. So it's time to change the game, everybody, because if you go down, your business goes down. If your business goes down, right? Small businesses, make up 98% of our business community, 98%. Unfortunately, 82% of businesses go down every 5 years. So 82% of our entire business community gets wiped out right? They won't make it past year 5. But what happens is because we get all these new startups, nobody notices the ones exiting. However, you will notice when you exit, because it's not just closing down the business. Typically, there's a huge financial loss that we feel because we've cashed in our savings, we've cashed in the RRSPs, we've lost out on wages because we haven't been working for somebody else. So today is the day that all of this changes, and I'm going to show you how you start to change that. Does that sound good to everybody? Let's do it. All right. Okay, back to share screen. Okay, one more little thing, one more nugget, and then this is as down as Debbie Downer as I get today. If I can share my slides, go forward slide. Okay, so this is what's happening personally. So now what happens with respect to entrepreneurship, again, to Colin's point, just so you know, you're not alone here, founders, that the vast majority of founders do not have emergency funds. They don't have a corporate social responsibility strategy set up, nor do they have an exit strategy. They actually don't know what it is that they're building, right? They don't know at what point they're going to get out and for how much. The average income for a small business owner in Canada is $59,000 average. 87% though are not properly paying themselves, as we talked about. Their remuneration isn't commensurate with the work that they're actually doing. To Mark or Colin, or maybe it was Jarell's comment in there, that if you had to pay someone to do the work that you're doing, right, you're probably nowhere close. By the way, if you go to, and it's going to be in the link that I'm going to send you, but if you go to ziprecruiter.com/salaries, you can put in your industry, like put in your title as general manager, not founder, but general manager of the type of business that you run. And it will show you, if you had to pay someone to do the work that you're doing, how much money that would actually be. You're going to probably fall off your chair because you're probably not close to what that number is. The average founder is $35,000 of debt. 7 in 10 founders close their doors due to poor financial management. So when I said 82%, and I'll take back my words because that's a North American number, 82% of North American founders close their doors due to poor financial management. In Canada, it's 71%. These are pre-COVID numbers. 53% have a stable credit score because, as you likely are aware now as founders, most lenders will look at your personal credit score. They don't take into account your business credit score, or they might take it into account, but they're definitely looking at how you manage money. And 89% of founders are generating less than a 3% net profit. Does that hit home for anybody? Net profit, again, just so we're all on the same page, net profit is all of your sales, total income minus your direct cost, also known as cost of goods sold, equals gross profit. That's usually the profit line that all the founders like to talk about because it's healthier. And then from gross profit, we subtract what are known as indirect costs or operating expenses, and we get left with a net profit. And as we see here, 89% are generating less than a 3% net profit. Now, why net profit is so important to all of you is because net profit is actually an indicator of 2 specific things. It's an indicator of your ROI, return on investment, in your business. And this is what we're going to move into. So it's an indicator of your ROI on your business investment. And your net profit is also important because it is going to inform the purchase price, that the money that you will get in exchange for selling your business. A big portion of the valuation is dependent on your net profit. So the lower your net profit, the lower your valuation. There's another reason why net profit is so important. There's 4 in total, and there's going to be a quiz on this at the end. So first, it's your ROI. Second, it's about the purchase price that you can get, or the sales ticket you can get, sales price you can get on selling your business. The other reason why it is so important is because your net profit at the end of the day is what moves over onto your balance sheet in financial statements, and it's what becomes retained earnings. Retained earnings in our personal world, we call that an emergency fund, right? The retained earnings are our savings. It's our savings account, it's our emergency fund. And because the vast majority of founders in this country were generating less than 3%, and if they had it, then they'd go spend it. That's why when the government came up with SEBA, everyone went again running for it. So they went running for the personal benefits and they went running for the business benefits, because your relationship with money in business mirrors your relationship with money at home. If we don't have savings at home, it's very unlikely we have savings in our business. Does that ring true for anybody? Is that hitting home for anybody? We have to see our numbers for what they really are, right? And that's what your net profit is in business. It is your emergency fund. And unfortunately, we live in a society where there's a huge stigma around profiting in business, right? Profiting is seen as greedy and opportunistic and capitalistic, right? It's because we don't have the net profit that our businesses go bust. That's what happens. Everybody thinks that the answer is sales. Sales will keep you afloat. But if an economy goes downturn, if a global pandemic hits, you need to make sure that you've got the emergency funds in your business. And that's a big piece of what we're going to talk about today. Okay, so now that we've got all the data out of the way, let's talk about how we actually start fixing this. So financial vulnerability, now that I've got my number straight, we know that most people are sitting at a 2 or higher. Very few are at a 1. Thank you again for that clarification. So this is what we're here to do today. Now, what is the fix? This is probably not what you are expecting, but we actually have to start fixing our home situation before we start fixing the business situation. I'm curious to see if you put in the chat, does anybody realize or do they recognize the importance of why we have to see, remember again, get really clear on what financial security and safety look like at home before we start building it into the business? Anybody have any idea? Mindset, Karen, absolutely, that's a big one, for sure. Any other ideas? I know it's a trick question, and most of you weren't prepared to talk about personal finances on a business call. Practice, yeah, absolutely, that's a big part of it, right? Because how we manage our money at home is going to influence how we manage our money in the business, so absolutely, bang on. Let's see if we can get one more. Habit. Okay, great, Patrick, yes. So forging a habit, right? And security, I love it, everybody starts moving here. Also makes us vulnerable, Karen and Krista, security. Yeah, okay. So what we're going to do today, there are going to be 3 numbers. When we actually take a look at our personal financial situation, we're going to uncover 3 numbers. Today, we're going to show you how to uncover the 3 numbers. I'm going to invite you into what we call a blueprint. It's free of charge for you, so that you have all the tools, because to get this done in an hour, I don't want to say impossible, because nothing's ever impossible, but I want you to do this properly, because when you actually lock in on your personal financial situation, what you're going to end up with is you're going to know exactly how much the business needs to pay you every month to ensure, to Krista's point, your financial security and safety at home. All the work we do at Nail the Numbers, what makes us so different is that we always go backwards and bottom up. It isn't about doing what you can with what you make. It's about clearly understanding how much money you need to make to ensure that everything gets handled and everything gets done properly, right? So that's the first number that you're going to get out of our workshop today. And then hopefully I'm going to invite you to spend another 5 mornings with me so you can really hammer this home and make sure you know these numbers. So how much the business really needs to be paying you. It is likely above and beyond what is even fair market value, just to be honest with you. The other number that you're going to get out of this is how much money are you currently making? What is your current return on investment, on your business investment? You're going to see that very differently. And then the third number you're going to get out of this, believe it or not, is your retirement shortfall. So we know that $13.7 trillion deficit exists. And the #1 trend fueling that deficit for Canadians is entrepreneurship. because the vast majority of founders aren't even bringing home enough money to just like skate by, let alone sock money aside for their retirement. So I promise you, when you nail down these numbers, you will be motivated to actually build a business that takes care of you financially. Because what you've been doing, and I say this with love, is you've been hiding from the reality of your financial situation. And the way our brain works is it's only when it's backed into a corner and it sees that, I really need to force myself out, that it gets out of that situation. Pressure is a privilege. And it's when you see the choices that you've been making and you say, no more, I need to get motivated to do differently in business, that's when you will start building a financial plan for your business, one that doesn't have you play small. Because that is my other big pet peeve. Sorry, Linda, because I know Business Link is about supporting small business, but I am not a fan of the term small, because I personally believe it has us conditioned to charge ourselves a small wage, to charge a small price, and to have a small, less than 3% net profit. So this is why we call everybody financially fierce founders, because you are business owners that are going to own your value and own your purpose and get out there and build strong businesses that flourish.
I have no argument with that. Really, I don't. I love that. I've just so people on the call know, I've been building my business for 25 years now, and every step of the way we've always had to think big, 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 evolve, 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 and figure out how to charge, and really charge for everything we do. And it makes a world of difference. I can tell you that 25 years in, I all of a sudden have access to capital I didn't have access to before without having to co-sign for anything. I have strategies now instead of, whack-a-mole with what's coming next. And that is a great place to be, but that also does not come from thinking small. That's absolutely right. It's thinking, what do I see myself and where do I see myself in 5 years' time? If I were to be strolling through my office or my whatever, the big building I own, what does a day in the life of me look like in 5 years' time? And it's a real eye opener to do that.
Beautiful. Well, thanks for weighing in, Linda. I appreciate that. I didn't want to get in trouble there with Business Link, because a lot of respect for small business, but let's just change how we perceive it. And Linda and I met way back when, I think it was 2001. And just so all of you know, I'm here because that business that I had where I originally met Linda, it went bust. It went belly up. And we were in the middle of growing. We were growing across Western Canada. I had a team of 14 people. But the reality is that my business model never worked. It was broken from day one. And I kept trying to, I kept thinking that sales was the answer. But the reality is the greater my sales became, the greater my net profit deficit sank. Like it just got worse and worse and worse. So we're going to talk about that today. But I'm sharing that with you here to let you know that I have been where a lot of people feel like they're on the brink. I've been on the other side, but that's why I'm here, because I actually figured out how to build financial models. I became a lender. I got to see thousands of cash flow forecasts and financial plans. And then I also got to see behind the curtain on credit reports. And that's when I'm like, darn it, it's an epidemic that is killing business owners. Need to rise to the occasion and just like get out there and make sure that founders own their numbers. It's up to you to own your numbers. It's not your bookkeeper. It's not your accountant. Okay, that was a rabbit hole. I'm coming back up and let's actually get you started. Okay, so if everybody has their worksheets, great. If not, just follow along. Take a scrap piece of paper and just start crunching out some numbers here with me. And I have to end this. This is not what I want. Sorry. End show. Your worksheets should look something similar to this. If you don't have them, do not stress. Just again, get a pen and paper and start charting out the numbers. Your value is not in these worksheets. Your value is in the academy and the blueprint, which I'm going to show you how to get into, but just follow along with me. Entertain me. Let's have some fun with this. So just quickly, again, I don't want you to make this overcomplicated. By the way, it's not you making it overcomplicated. It's your subconscious to keep you in a state that it's familiar with. So just force it not to get overwhelmed right now. I want you to think about how much time you've put into your business. So rough numbers, follow along, do the work, and you can change it after. We call it a quick and dirty. It's a rule of thumb at nail the numbers so you don't get stuck. I want you to put in how many hours you work every week. Quick and dirty. 40 is full-time. You might be putting in 60. You might be putting in less. Put in the numbers on average that you work every week. Boom, done. Now I want you to put in a market rate. Do not go and start researching this right now. $36 per hour is $75,000 a year. I would hope all of you would be making that, if not more, but not less, not for a general manager. So you can start with 36. After, you can go research it, but for now, just put fair market rate, $36 per hour. So now you're going to multiply 40 by 36, and you're going to end up with your investment of time every week. In this case, $1,400 per week is really what the business should be paying me. In the chat, can everyone just give me a thumbs up? So everybody's, let me know that you're good with those numbers. Everybody's following along with that assignment. Just rough. Okay, awesome. Thank you, everybody. Okay, so next step, this little trickier, but hopefully I think everybody here is going to get this. What you're going to do here from the 1,400, again, don't go trying to go through all your paperwork right now, but roughly, what does the business pay you per week? Is it $1,000? Is it $400? Is it $200? Roughly, what is the business paying you? And then you're going to subtract it from your number here, your A, whatever that is. So you've got your A. In this case, I've got 1,400. I'm going to say in my example, the business pays me $1,000 a month. The difference is what you're going to put down here under wages owed per week. And everybody give me a thumbs up when you've got that number. So the business is already paying me $1,000, so it still owes me $400. Okay, everybody good. Awesome. Okay. Now you're going to actually multiply that by how many weeks have you been in this business, right? How many weeks have you been giving it everything you've got? So is it 52 weeks a year? Is it 104 weeks? Is it like, how many weeks have you been in this? Pretty easy math. You can always come back after and dial in on this, but it all changes from this point forward. And now you're going to multiply 400 by 52, and I get 20,800. So I want all of you to land in on the total value of your time invested that you have not been compensated for yet. Right? So 20,800 in this example. Give me a thumbs up when you've got your B number. Smiley face. Yes, Mark. Love it. Jasmine, yes. Awesome. Okay, let's get one more thumb, everybody. There you go. Okay, thank you. Okay, so now we know what we are out on, what we've not been compensated on. And so now we're going to go on with respect to time. We've got that locked in. Now we're going to go to money. So this one's a little bit easier. I want you to think about how much money. Sorry, I'm trying to move my dashboard here. There we go. Your startup expenses. So this isn't your, this is your personal money into the business, not loans, but your personal money that you have put in. So maybe you've cashed in your savings, your RSPs, right? You've maybe, hopefully, you've put some cash aside specifically to start up the business. But how much money did you personally invest into the business? And either startup and over time. So in this case, $20,000 at startup, $10,000 here and there over the years, and now over the weeks, I guess in this case is because 52 weeks. So total investment in out of my wallet, $30,000. And then once you get your E number, you add E and B. So your total investment in right now to this business, in my example, 50,800. Give me a thumbs up when everybody can actually see their total investment in. Most founders that we worked with have no idea what their investment is. So they're like, I don't know. I work a lot, but I don't know how many hours. We're not tracking it. Probably mirrors that we're not tracking our money, right? Not tracking. It tends to be a ripple effect. Okay, let's get one more thumbs up. Everybody got their total investment. When you've got it, give me one more thumbs up and we'll move on. Total investment in. Just so you know, everything changes from this day forward. The fact that you're here, you're on a brand new trajectory. We can't change the past, but we can definitely forge a new future and a new financial path forward. There we go. Okay, awesome. All right. I am going to be giving everybody my email at the end of this. If you have any questions on this, we can come back and certainly circle back over it. But again, I really want you to focus on going forward. Okay, so now our next assignment here, you likely will not have these numbers in front of you because unfortunately most founders wait until 4 months after year end to look at the statements that their accountant has prepared for them to know these numbers. I say this with a little cheekiness because it's true, but we've got to change this behavior. I want you to think about what your total sales were. Now you get to pick if you want to do this by year, if you want to pick, the first half of 2023, what were your total sales? You get to pick the time frame. You can even pick a month if you want, but what were your total sales? Total sales. And then the next question, this can be even harder, but what was your net profit? Again, your net profit is total income minus direct costs minus indirect costs equals net income, net profit, the bottom line. They're all the same thing. So I want you to think dollar values or your total sales, and I want you to guess, because most of you will have to guess what was your net profit. And for some of you, it may be zero, it may be negative. For most of you, it's likely going to be low. So when you get those two numbers, give me a thumbs up. Awesome. Let's get one more. And just so you know, when we get to work with you at Nail the Numbers every week, you know exactly what your sales are. You know exactly what your net profit is. You're actually putting your net profit aside, right? You are so dialed in. Okay, awesome, Colin. Thank you. Okay, so now what we do to get the percentage. So now we've talked about dollar values. To understand the percentage, all you do is you divide your net profit, in this case, 2,000, and divide it by 100,000. And it will show you your net profit, in this case, 2%. Easy math. Everybody probably has a phone nearby, so use your calculator and take your net profit and you divide it by your total sales, and that will give you your net profit, aka your net income, aka your bottom line, as a percentage. Do you subtract what you, nope, we're not going to subtract your, actually, so Krista, you're brilliant on this because you're right. Oftentimes people will say, to Krista's point here, oh, I have a 2% net profit. But you're right, if that does not include your wage, right? And unfortunately, most founders pay themselves at the very end, then you're right, Krista, you would subtract your wage from that and say, I'm in a negative situation, which is what happens with most founders because they haven't intentionally planned for their wage. So it gets taken off the bottom line. Krista, you're brilliant. Thank you for bringing that up. So yes, subtract what a fair market wage would be for a general manager from that net profit. And then put in the chat, how many of you are a positive net profit and how many of you are a negative net profit? So thumbs up is positive, thumbs down is negative. Jasmine's positive, Colin's positive. Awesome. Negative, positive. Let's get a couple more in here. Make sure everybody's playing along. Negative, negative. Okay. So again, the vast majority of founders are barely making that 3%. When they take that fair market wage, it goes down. This is why 71% of us go down after 5 years. We need to build up that net profit. So here is just a huge aha moment for everybody. This usually nobody sees their numbers like this. If you go and you took your 50,800 and we decided that we were going to invest that. So our time and money in, I don't want to make you feel bad with this, but I do want to motivate you to do differently, right? Pressure is a privilege. Just so you know, we could have gone to any bank in the country and we could have put this in a savings account, and for 10 minutes worth of work and zero risk, because it would have been guaranteed, we would have made 1.75% at the very least on a savings account. 1.75, no risk, it's guaranteed. Okay, did that just blow anybody's minds there? 1.75 we would have made for 10 minutes worth of work, zero risk, and we are choosing less than 2% for 40 hours in and for a major risk, right? Nothing's guaranteed in business. Just put in the chat if that just really landed for people, because that's the intention of that exercise. I want you to realize, okay, see a little frown face, Mark, I get it. But again, now because you have been here, you know this, now you realize you have a choice, right? Now it's like, okay, I'm choosing to build an investment that is making less than a savings account. And now we get to choose differently. Awesome. Thank you for that. Okay, that was the goal of this, not to make you feel bad, to motivate you into action and to realize that everything is a choice in life and in business, especially in business, because we're the founder. We get to choose what our sales are. We get to choose what our net profit is. We get to choose how much we pay ourselves. We get to choose what our price is, but most of us don't see it as a choice. We're going to change that. Okay, so that was wake up call number one, everybody. What your business has been paying you with respect to an ROI and is likely less than what you've been making on a savings account for 10 minutes worth of time and zero risk. It's guaranteed that you would make that much. Just so you know, when you work with us at Nail the Numbers, our goal on the business side of things is to get you to 11.5%, 10% for you and 1.5 for CRA, because we know that you could take your 50,800 and very easily, I'm not a financial advisor, so I'm not providing financial advice, but you could put it into an index fund or a EFT, and you would likely make anywhere from 4 to 7. Some over COVID were performing at 21%. So we think 10 is a safe number to start. As a business investment, if you're making 10% back on your ROI, that's a pretty healthy, decent number. So that's where we want to get you to. Okay, so that's eye opener number one. Eye opener number two. All right, sorry, Krista, jumping on my, okay, awesome. Sorry, my chat scrolled to the very beginning. Okay, eye opener number two, we're not going to spend a lot of time here because I am going to invite you to really drill down on these numbers in the academy and the blueprint that we call the Stronghold Budget. So if you've got your worksheet open, you will see that what we really need to determine is how much money do you really need to be making every month? How much money does the business really need to pay you? Not squeaking by. And if you're like me, one of the, I call them crutches, but one of the crutches that kept me paying myself a small wage was that my husband at the time made a lot of money. So I didn't need to make a lot of money. And that's what kept my wages small. So oftentimes, many of us have crutches that we use as excuses to not necessarily earn what really needs to be earned. I just want to draw your attention to that. So all we're going to do here for the next 5 minutes, and then I'm going to show you the reality behind the curtains and the work that I really want you to do. Hopefully you'll do it with me starting Friday. But I want you to just take a moment to actually think about your 5 financial pillars, as we talked about: saving, spending on needs, wants, and debt, investments, sharing, and then earning. Whoops, sorry, I am making this go too fast. So in your workbook, I want you to just really quickly think about how much money would you like to be setting aside every month to replenish, because many people tapped out their savings account through COVID. Would you like to replenish your savings account with? So in this case, $417 per month means you'd have a savings account of $5,000 a year. If you want 10,000 at the end of the year, this would jump to 8, and I can't do the math right now, 834, right? So just quick and dirty, just get it done. The real work is done in the blueprint. On your spending needs, I want you, okay, awesome, Karen. So the difference between, great question. The difference between save and invest. Thank you for asking that. Save is the emergency fund. We set money aside so that we have quick access to cash in the event of an emergency. Experts have different opinions on how much money you should have in savings, but definitely at least 1 month of your, what we call a personal burn rate, right? Your rent or your mortgage and your food and the groceries and your credit card debt. Some experts say you need to have 6 months. Some experts say you need to have 12 months. But your savings account is money that is set aside in the event of an emergency, and you can access it quickly. So it might be in your savings account. It might be that you have some cash at home. It might be in what we call an income fund in the market. The idea is that you can access it quickly, right? Quick access to it. It's an emergency fund. Investing, savings, just so you know, from a behavioral finance perspective, savings is short-term security. From a behavioral perspective, investing is long-term security. So when we get our savings account to a very specific number, let's just say it is $50,000. We know that, okay, that's solid. That's however many months, if something comes up, if I lose my job, I know we're always safe. When you get to that number, you stop saving. You actually stop. You keep the money there and you stop, and then you reallocate those funds somewhere. Investing is your money making money for you. And the number one intention of investing is first to ensure that you have enough for retirement. That's the first goal of investing. Investing comes in many shapes. It can be your registered retirement savings plan. This is why it gets confusing because they call it savings, but it's for retirement. It's for the long game, right? It could be your pension plan. So it's specific intention. Number one is to make sure you have enough in retirement. Once your retirement funds are set aside and you feel like you're on track to make that number, then you can start playing with those investment dollars, right? So again, we compromise our security. We're in a country where our security is compromised, both short-term and long-term. We seem to have it all backwards, right? And so solid financial management, what we call financial stewardship, it's like a big puzzle. And every single piece of your life and your business is a piece of that puzzle. And the puzzle, the big piece, the finished piece is actually that your retirement is good. You're taken care of. That's when you can actually start playing after that. You know you're on track for that. So great question. All right. So spending needs, I want you just quickly to actually just think about what are the actual.
Sorry, Tanya, I'm just going to interject here. So for everyone who's on the call right now, if you're raising your hand, please take your hand down and put the question into Q&A, because we won't be able to unmute you by raising your hand. So you can see the Q&A box. It looks like we've got a question coming in. And then secondly, Tanya, Rawa is going to take over from here as I drop off the call. Thank you very much. And I'm sorry I interrupted all of your train of thought to do that. And if you have questions, folks, pop it into Q&A and we'll interrupt. We have someone who's put in, how can you have a negative profit? Oxymoron. I'll let you answer that one, Tanya. And thank you everyone for joining. And this recording will be on the website in 2 to 3 business days as well. Thank you.
Awesome. All right. So I'm going to answer that question. How can you have a negative net profit? It's because, well, you can, and unfortunately most businesses do. It's that negative. What happens with a lot of founders is they look at their bank account to be the barometer of how they're doing financially. And unfortunately, their bank account isn't the best indicator, because from that bank account, you might have future bills, or not future bills, but you've past due bills that are coming due that haven't come out yet. You might also have future income that is coming in that you're not aware of. So that bank account is really not a healthy barometer. So unfortunately, what happens for most business owners, because they're not on top of their net profit every month and knowing exactly what it is, they wait until 4 months after year end when they get their accountant prepared statements and they see that, what do you mean I was in a negative position, right? That I actually didn't make money. And so where that was hiding was in that bank account based on future income and past bills. And it gets really muddy when the founder isn't on top of the numbers on a weekly basis. So that's why we can end up with that negative. But I promise you, if it's not feeling good right now, it's probably going to be a negative position at the end of the year. But I don't want you to have to wait for that. I actually want you to generate the positive net profit, which is what we're going to talk about. So hopefully that answered that, I hope. All right. So again, just quick and dirty, I want you to put in, and you might already know what this number is. How much do you need to put towards spending on your needs every month? So your groceries, your rent, your car, your vehicle, your transportation, your kids, your activities, their activities, right? What is that on spending needs? Spending wants is actually where this gets a little bit more frivolous. These are things that if you can imagine the end of world is coming, what would be the things that you would get rid of right away? Probably get rid of Netflix. You might get rid of Apple Tunes. You might get rid of your nails. You might get, well, not your nails, but getting your nails done. You might be getting rid of haircuts. You might be getting rid of some of your clothes, right? Shopping budgets. These are the things that would be the first that you would start cutting. That's what we call spending wants. So think about how much you need every month to how much money you need for spending on wants. Then I want you to actually write down how much money you spend towards repaying your debt every month. So we know that the average Canadian is $27,000 in consumer debt. I want you to think about what is your monthly repayment rate all combined on your what we call revolving debt. So credit cards, lines of credit, past due bills, maybe past due personal income tax. This is all personal, right? So we're going to figure that number out. And then if you put any money towards investing, write that number. And if you put any money towards sharing, not taxes for now, but just giving back. So whether it's tithing, whether it's your point of sale requests, right? Would you like to donate $2 to the Kids Helpline, right? All of those numbers, door-to-door contributions. What do you actually put into sharing every month? So put those numbers down. Does everybody have that? I know we went off on several different points there, but that hopefully gave you some time to get that worksheet roughly filled out here. Give me a thumbs up when you have those numbers. Total income needed, add everything up. I've got one thumbs up, let's get two more. Again, don't overthink this because there's actually real work to be done here. Okay, awesome. Okay, so now that you know that number, whoops, geez Louise, why does this keep happening? Here's what you're gonna do. You're gonna subtract your current income. So current incomes means guaranteed income. Usually when we have a partner at home, oftentimes that partner can have the guaranteed income, but this is not your salary. This is the income that is guaranteed in your household per month. You're going to put that under current income. And then once you get that, you're going to subtract. So total income needed minus the current income that's guaranteed means additional income required. 3,817. So A minus B equals 3,817. And then I want you to add, what do you think 30% is for here? Put it in the chat. What do you think? Why are we adding 30%? Yes, yes, good job. Exactly. We have to budget for the frigging tax. Otherwise, at the end of the year, we get that bill going, oh, you owe us this in income tax, right? So in this case, our 30%, now we see that this founder actually, maybe I was making 4, but I actually realized I need to make 4,962. Now I'm going to show you, I want to show you this tool. You have access to this tool, and I'm going to show you how to access it. But I am going to run you through when founders do this work, everything that you just did, this is what we call the current snapshot. And in the work we do together, you dial in. So we're not picking arbitrary numbers, still a quick and dirty, but we are getting into the details. So it's going to show your total needs. In this case, 4,850 in a current snapshot. Under wants, it's actually 1,945. Your splurges, which are, that's an above and beyond. I can speak to that after if you have questions. But all in, our debt repayment, our investments, you can see this calculator breaks out each one of these pillars, and it's going to ask you to get detailed. Now, in most cases, what you're going to realize when you do this work, we get to start this work together on Friday. If you got the courage to do it, I'm going to encourage you to do it though, because this is what's going to change your business. Most of you will realize that you're in a negative situation, even at home. So in this case, they realize that they've been overspending by $1,913 every month at home. To whoever's question, whoever put out that, how can you have a negative situation? Where is this negative? Where are we actually finding this 1,913? How can we be negative in our home budget? Where are we finding $1,913? Because we're not earning it. Where are we getting it? Borrowed, exactly. Usually credit cards, lines of credit, right? So in the work that we get to do together, we look at the past, but more importantly, we actually want to do what we call the stronghold budget. And like all of our budgeting, we start at the bottom and we go up. So we dial in on what are the true needs. You can see in this case, the true needs have actually gone up. So instead of 4,875, I hope everybody can see this. I might make it a little bit bigger. So instead of 4,875, the true needs on spending are 5,300. Under our wants, we were budgeting, we were spending 1,945. We've tightened up the wants and now we're spending 1,320. Under our splurges, we were spending 1,300. We are now spending 1,100. Our debt, I'm going to show you that in a moment. We were putting $1,070 aside for debt. When we do the stronghold budget together, you're going to know exactly how much money you need to apply to your debt every month so that you get out of debt in 36 months at the very most. So in this example, we went from 1,070 to 1,500. And then our investments. I'm going to show you what we're going to do there, but we were investing 306. We now know that we need to invest 1,668 every month. And our savings, we're putting in 417. Our sharing, including all of our taxes, we now realize, oops, sorry, everybody. I'm going to take this out. Actually, I'll put it back in. Long story short, this entrepreneur, they were making $3,000 at the beginning. They now realize that they need to be earning $7,861 per month. They've over doubled what they need to be making. How many of you think you need to be making more money than you're currently making? I think, well, from what I remember earlier on in our conversation, yes, me, yes, absolutely. I can almost guarantee you that that is the case. For how many of you does this feel scary? Does this feel scary, the fact that you need to double potentially what you're making right now? Yeah, very scary. Okay, challenging. I like that, Mark. Challenging, not scary. I want to not leave you because we still have time together, but think about this. What would stop you from making this money? What would stop you from earning $8,000 a month? What would stop you? Fear, laziness, procrastination, support. Okay, awesome. So usually when I ask that question, I love that you've gone with the emotional one, because you're right. It's all the crutches. Is the fear is always future based, what if I don't make it, right? And then that keeps us stuck in procrastination and laziness. This is why I want you to do this work with me on Friday. You have access to it for free, but I want you to do a challenge with me starting on Friday so that you're done it in 5 days. But this is what motivates you out of this financial slumber, right? Like we can't hide from these numbers. They're going to catch up with us at some point. So let's just dial in, because as entrepreneurs, this is why I love working with you. There is no cap to how much money you can make. There's no cap to it. It's just that our belief system has us in this small mentality. Pay ourselves small, charge small, profit small. The work we get to do together is about building bold. We call it building bold. right? And just healthy. So this is the wake up call. Number 2 is how much money you actually need to be making. I am just going to show you very quickly, because we do have a little bit of time here, that again, this tool is available for you. And this is called the debt repayment calculator. And again, why I want us to do the challenge together, I'm going to show you exactly how to do this, but you're going to put in all of your revolving debt, credit cards, lines of credit, past due bills like CRA. You put in the balance, the interest rate, how much you're currently paying. And I'm going to do a little to go down here. It's actually going to show you how much debt you are currently in for revolving debt. In this case, 38,000. We know the average Canadian is 27,000. The average entrepreneur is $35,000 in consumer debt. So again, my payment right now is 1,070. And then down here, this is a, hold on to your pants. This is going to be a, I want to vomit moment when you see this number. But again, it is going to motivate you into action, because pressure is a privilege. This has all been going on. We just haven't looked at the numbers before. So this calculator is going to show you how much interest you are paying on your current debt load. So in this case, $38,000 of debt. If I continue to make those monthly payments, I'm paying 21,000. Whoops, it doesn't like me doing that. I'm paying $21,000 in interest. $21,000 in interest. So what we do together is they're like, and I know the answer here, but what would it take to get out of debt in 36 months? Right now, we can see that based on the current plan, we're 57 months it's going to take us to get out of debt. So I happen to know that if we make payments now every month of $1,500 versus $1,070, that will get us out of debt in 34 months, and we've saved $10,000 in interest. So now you guys get to pick your numbers, but again, you get to see exactly what is going on with your numbers, and you get to own your choices. So now there's no more hiding. But again, this is why I love working with founders, because I know you have the courage to take the risk and build a business. Now you get the courage to dial in on your numbers. Did that resonate with anyone? That's not a wake-up call, but I'm excited for you to see this debt repayment calculator, because that, yeah, oh my gosh moment is what gets you stopping to use your credit card and getting that paid off. Throw it into the chat if that resonated. Bum, 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 bum. Anyone? There we go. Okay. Thanks, Karen. Thanks, Mark. Appreciate it. All right. So now the third wake-up call. This is a lot. This is heavy for everyone, I know, but I'm so proud that you're here to do this, because again, I don't think I've mentioned this before. The way we manage our money, our relationship with money, we're passing this on to our kids. So when we start taking ownership of this, and we can show our kids our choices in the past and show our kids our choices going forward, it's important that they see the messy stuff too, because oftentimes as parents, we don't want to show that. And then our kids think that they're supposed to have it perfect. And this is what keeps us stuck in a society of a lot of shame and secrecy, because we think we're supposed to have it all together. And our parents didn't have it together. Most of us, really, they didn't. Teachers didn't have it together. Our government, I love it. I know this is a recorded call, so I'm just going to, but where do we model solid fiscal stewardship? Top down, bottom up. It's up to us to do it for ourselves. And then our kids learn that. Okay, so third wake-up call, it is still in all of your tools. And again, all of these are free. You're going to see it right here. In all of your tools, you get your budget snapshot, you get your net worth calculator, and you get your retirement calculator. And because of time, I'm going to scooch through this, but sorry, I'm moving my chat if you're wondering what I'm doing, because I don't think you can see my chat, but it's over in the corner. Okay. This is why I want us to do the work together. So your retirement calculator, what you're going to do, this is a great exercise to do with your partner over a glass of wine. I won't lie. You're going to put in your age, the age that you wish to retire, and how long you plan to live. Is basically years to pay out is what that means. And then down here, and I know I'm speeding through this, but I want you to realize that this is the work that we get to do together. Hard to do it on this call in an hour and a half. Then we're going to take a look at your current investments. What is the rate of return that you've been making with them? Your investments, not your savings, your investments. We're going to take a look at, we're going to make some guesses on what that rate of return is going to be when you go into retirement, because usually it's lower because we're moving everything over from high risk into low risk. And this inflation rate. Watch this calculator. This is going to be fun. So right now I'm going to lock in inflation at 2.5%, which is kind of what we were seeing pre-2023 here, but 2.5. You're going to put in your salary. If you're making any investments, all of those go in here. In the work we get to do, we're going to do all of this together. So it's simple, super clear, but I just want to show you what your calculator looks like. And then over here, you're going to put how much money that you actually think you need to live off of in retirement per year. In this example, it's 100,000. Watch this. If you weren't paying attention, now is the time to pay attention. So $100,000. This calculator is saying, okay, we're going to adjust this now for inflation at 2.5%. So if today we think we need 100,000, the calculator is saying, well, based on 2.5% inflation, you being 45 now, and we need 22 years that you've got that you can start building this before you're actually going to start taking your retirement out. We think it's 100,000. It's actually $172,000. 172. Now, watch this. What is the inflation rate today? Anybody know? I haven't been paying attention to it this week. Anybody know what our inflation is? Throw it in the chat. I know we went as high as 8.9. I think we're down a little bit now. Anybody know what that number is? This is why we want to keep our eye on it. 4.4. I'm going to go with it, Mark. Watch this. If we held at 4.4, oops, wrong place. Do as I say, not as I do. 4.4%. Keep your eye open here on this number needed. Inflation adjusted number, hit enter. 257. So based on it going up less than 2 points, our 172 turned into 257. This is why we need to keep our eye on inflation. If we were 8.1, we now need 555. Again, I don't want this number to scare you. I want you to, I'm just going to put 3 right now so we can come back down to earth a little bit and not be afraid. I want you to look at the numbers because again, it is totally within your control what you create in your business. Totally within your control. All right. So now that we know that, as we go through the calculator, we actually start taking into account your investments. We start taking into account CRA and what you're going to get paid out. We take into account your other investments, your investments at retirement, what they're going to be worth. But what you're going to get out of this exercise is exactly what your shortfall is. You don't need to wait for a financial advisor to tell you what you need to be earning. Your calculator, and especially when you stay on top of it, it shows you. In this case, I'm short $816,000. If I plan to live off what I think is $100,000, inflation adjusted 191, I've got 22 years to pull that together. I'm short 816. So now it's telling me if I do nothing, I'm going to have 15 years of retirement funds available, right? Not 20. And if I wanted to top it up, I now need to get another $12,991 set aside every year so I can make that shortfall happen. Does that make sense for everybody? Put it in the chat if all of that is connecting for you. Why we do these numbers. Put it in there. Awesome, Jasmine. Let's get 2 more. Yep, Collins. Yep. Kristen, makes sense. Yep. Okay, awesome. So now, here's the other thing that I want you, this is another huge aha moment. Where else can we make $816,000? OnlyFans. Yes, Mark. Web real estate. I love it. That's an investment, right? So that should be showing up in your investments over here. Absolutely. But your business, the sale of your business. Thank you. Thank you. This is the third wake-up call. This is why I want you to do this work first, because it is so important that, and I know people are like, when are we getting to the business numbers? Most of you don't even know what it is that you're building. You don't know what it is that you're building. You don't know, I'm going to build a business worth, you should write this down because you should know these answers. I'm going to build a business that is worth X dollars $816,000 in the next X number of years, 3 to 5 years, by offering these services to this group of people and having this impact. You should be able, 5 questions, you should be able to answer that. The value of your business by when, what services or products, for who, and what impact. 5 questions. So until we know how much the business needs to pay us every month, and now that we know we need to create a business that's going to be worth $816,000, now we can start building a business budget. Now we know the end game. Most of us, if we build a budget in business, we're building it going, what is the year going to look like? And we're picking numbers out of thin air. We're typically doing what we do in our personal budget, which is, what can I do with what I make versus what do I need to make to ensure that I can build a business that's worth $816,000? Does that make sense? Can you just give me a thumbs up? Like, hopefully that is landed. You need to get clear on what needs to happen at home, because that is going to influence what you need to build in your business. Yes. Yay. Perfect. Awesome. Thank you. Okay. So I told you there's a trick question. Trick question. There are 4 reasons why your not a trick question. Sorry, it's not a trick question, but it is. I need you to know the answers to this. Why is your bottom line so important? There's 4 reasons that your bottom line is your first priority in business, not sales. 4 reasons. Let's get them in here. Let's get them in the chat. Reason number 1, your bottom line is your AKA. Okay, I'm seeing cash flow ROI. So yes, okay. So your bottom line is absolutely your ROI. It is an indicator of the return that you are making on your business investment. Yes, Galia, it is your, I hope I said that right. It is your purchase price. So your bottom line in every industry, there's what we call a multiple, right? It could be anywhere from ×2. So your bottom line ×2. In tech, it's typically your bottom line ×10. Your bottom line times that multiple is going to inform the purchase price. There's also assets and there's also cash flow, but we're not getting into that today. Okay, awesome. Yes. So Patrick, number 3. So ROI, purchase price. Number 3 is your retained earnings, AKA your emergency fund. That is the other reason why bottom line is so important. And the 4th reason, and I didn't talk about it, so I'm going to share it with you now. I'm giving you the answer. It is where your impact comes from. It is where this is the full circle moment. When people talk about why they build a business, a lot of them say it's because they want to give back. They want to make the world a better place. It is your net profit that allows you to have impact in the world. It is your net profit that allows you to go and build the children's wing at the hospital. It's the net profit that allows you to go give the donations. It's the net profit that allows you to buy or plant the 1 tree for every 10 pairs of shoes sold. It's your net profit that allows you to have impact. Most founders are compromising themselves to make sure that they can give to others. Business is like the plane. You've got to put your oxygen mask on. You need to make sure that you've got a fair salary, that you're treating people fairly, that you're paying your staff fairly, right? That you are ensuring that your customers receive optimal care and value for the services that they're receiving. And still you have that net profit, and it's from net profit that you can give back. Okay, I want to make sure we wrap up in time. So 2 really important things I want to share with you. Let me find them. Actually, I'm going to share with you the first thing I want to share with you in your worksheets. There is a link for the Stronghold budget. Can you give me a thumbs up if everybody can see that link? Can everybody see that link? And maybe, you know what? Good Lordy, here's what I should do. Sometimes crazy. There you go. I've also put it in the chat. Make it simple. That link gives you access to the blueprint in our academy. And if you use BL23, you get the blueprint for free. So all the tools that we talked about, everything is in there for you. Step by step by step instruction. It's all there for you. And here's my second offer. If you want to do this work with me, I got to find it here. Sorry. I would love to see you again. We start on Friday. We're going to do everything that we talked about. It's the stronghold budget, but it is a challenge. It's called the Wake Up Challenge. The Wake Up Call Challenge, it's a 5-day challenge. We start on Friday. We do not meet on the weekend. And then we go Monday, Tuesday, Wednesday, Thursday. Now, Jasmine, is it free? No, it is not. The stronghold budget is free, but here's my offer to you. We're late to the Google party. So if you, and I'm going to find it right here for you, if you leave us a Google review, and I'm finding it right now, you can see 7 reviews have been left in the last week. If you leave a Google review, I'm going to get this link for you. We're going to give you a coupon for $50 off, which means your challenge is only $40. $40 for 5 days. So we meet every morning at your time. It is going to be 9:35. It's 8:35 Eastern. So in Alberta, it's 9:35. Sorry, not Eastern, Pacific. 9:35 Alberta time. Time zones drive me nuts. 25 minutes every morning, but you want to budget at least an hour a day to get the work done. Sorry, it's not even, sorry, Mark. It is your time. It is 9:35 Alberta time. Mountain time, it's going to be 9:35. Sorry. Time zones, hate them. So you can, yeah. Whew. So you get $50 off. If you leave us a Google review, I'm going to see who you are. I need to make sure that I have your email address. Oh, how am I going to do that? I'll find you. I will find a way to get that link to you. I'm also going to give you my email right now. So if you leave me a Google review, just email me, let me know you left a Google review. Just be honest with it. I'm not expecting a 5-star review. It's on the work that we did today. Be honest with your review. And even if you give me 1 star, I'm still giving you $50 off the challenge. So the challenge is called the Wake Up Call Challenge. We start on Friday. We're drilling down on the work that we've done, but the academy is still open to you. So you still get everything for free, but if you want to do it together, I show up live 25 minutes every day and walk you through it. The last thing I want to share with you is the plan. So what happens after, and I know I have 2 minutes, so I just want to make sure I'm sharing screen. I'm not sharing screen. See, I knew I was, there we go. So what happens, I want to let you know that once you lock in on those 2 really important numbers, how much do you need to get paid every month? And what do you need to build your business into? We do a very similar approach, but we actually call it the financially fierce formula. And this is where we build a budget for your business. We actually go backwards, right? So what is the end goal? Not what's happening this year. What is the end goal? And we actually lock in that net profit of 11.5%, and then we move up. So then we figure out all of your indirect costs. We break them down into 4 categories. And what I want to share with you is that we actually spend the majority of our time together. It's a 12-step process. You get to tell us how long you want it to take, but it can't take longer than 15 weeks. We'd love for it to take, a month, but we work with you through this process. It is not done on your own. We sit with you in this and do this work. But what I really want to share with you is that we spend a majority of our time together in our business budget, working on what I call the Bermuda Triangle of business. It is where you are losing all your net profit, or a good chunk of it, and it's where your dreams disappear. It's because the Bermuda Triangle, people don't know how to navigate it. Founders don't know how to navigate it. And this is what closes your business, because you're not profiting. This is where you're losing your profit. So we spend time on locking in on your key revenue streams. What are the top 3 to 5 revenue streams that are going to generate 80% of your revenue? Nowhere left to hide. We're not doing any crutches here. You're going to get really solid on where you need to focus. We calculate the true direct cost in to the penny. And then we actually defend a profitable price. So our pricing strategy is what we call the weighted pricing model. And it's a hybrid of cost plus, right? Because now we know what you're actually out of pocket, what your competition is charging. And unfortunately, that's where most of you are getting your price. So we take into account what the competition is charging, but then we lock in on your huge, enormous value that you're offering, right? It's not small value anymore, it's huge value. And that's how we lock in on the price. So what you end up with is a financial plan in your business that will show you exactly how you're going to get to where you need to be from where you are right now. Typically, it's a 3-year plan. It can be faster if you want it to, but it shows you how you get from where you are to where you need to be. But it does not happen until you lock in on your personal budget. That's it. So everybody, thank you. I want to honor my commitment to get you out of here on time, because I know time is important. I want you to think about, in the chat, please put one thing that you are going to do, one thing that you're going to take away from this. I hope it is outside of enrolling in the blueprint. Like, tell me what you're going to lock in on. I hope it's going to be the challenge, because then we get to work together some more and I get to see your beautiful faces, which is what I really want to do. It's always awkward when I don't get to see everybody. But here's my email too. So if you do leave a Google review, please just email me here at Tanya@nailthenumbers.com. Let me know you left it. I'll be able to see it. And then I'm going to send you the coupon code so that you get $50 off the challenge. $40. It's less than $10 freaking dollars a day. You get all the calculators. More important than that, you're going to know exactly what the business needs to pay you, what your retirement shortfall is. You're going to get out of getting 36 months card, right? You're going to get all of that done, and you'll just be in control of your finances. All right. Okay, let me know how you're feeling. I'm going to stop the share. I hope that's okay. I'm going to stop the share and I'm going to open the chat. It was a lovely session. Thank you. I hope I see you in the